Hi, this is Lara at Elliott Wave Stock Market with an extra video update for you for the trading session dated Tuesday 15th of December. I'm expecting that a third wave down should start to really show quite a strong increase in momentum tomorrow. The structure is incomplete. The target for the midterm is the same at 1850, a new short-term target at 1934. Let's have a look at the charts. This is a more bullish wave count. It expects that this downward movement is part of a fourth wave correction at cycle degree, that at super cycle degree the S&P is still in a bull market, that cycle wave 4 will complete and then cycle wave 5 will continue that bull market. Cycle wave 4 had to turn up sooner or later. So this is the end of cycle wave 3. Cycle wave 2 was a relatively shallow zigzag, and so cycle 4 would be expected to exhibit some alternation. It's either a flat correction subdividing 3, 3, 5, or it's a double combination with a zigzag for W, a zigzag for X, and would be expecting a flat or triangle for primary wave Y to complete a combination. It could also be a big triangle. I have a separate chart for that idea. Either way, we'd be expecting downward movement. It should subdivide as a 5-wave impulse at primary degree if it's a primary wave C, or a 3-wave zigzag, or a 3-wave flat correction if it's primary wave Y, and that should start off with a zigzag to the downside for the A wave. So for both of these ideas, I'd be expecting a 5, 3, 5 to complete downward. Upward movement for Tuesday's session found resistance at this small trend line drawn from this swing low to this swing low. I'm copying it over now to the hourly chart. If we see any further upward movement when markets open tomorrow for Wednesday, then look out for price to find strong resistance at this trend line. We got the bounce that we were expecting. It's a lot bigger and deeper than I had expected, but we did get a bounce at this cyan trend line which offered strong support. I'm expecting for both wave counts that the strength of the next downward movement should be enough to slice through support at that trend line. The target for intermediate 3 is the same at 1850. It would reach 2.618, the length of intermediate wave 1. That's the appropriate ratio for that target if this is a third wave, because the second wave was very deep. Within intermediate 3 we have minor 1 and 2, and now within minor 3 no second wave correction may move beyond the start of its first wave above 2093.84. The other structural possibility for cycle 4 is a big regular contracting triangle with a zigzag for A, a zigzag for B. We'd need a zigzag down for C. I wouldn't want to try and label it over there. The AC trend line would have too steep a slope. It just wouldn't look right. And the structure from this high to this low at the hourly chart level I can't see as a complete 5. Intermediate C needs to be a complete 5-wave structure. At 1947 it would reach 1.618, the length of intermediate A, and then the AC trend line would have a more normal looking slope. Primary C can't move beyond the end of A below 1871.91. Going to look at the hourly chart when I look at the bear wave count, because the hourly chart at bull and bear wave count at the wave count for the hourly chart for both my bull and bear wave counts at this stage is the same. It's only the degree of labelling which differs. For the bear, everything has moved down 1 degree, but the subdivisions, targets, and trend lines and invalidation points are all the same, so we'll get to that next. This is a bullish alternate in which I have zero confidence. I cannot find much, if any, support for it from regular technical analysis at daily, weekly or monthly chart levels. If cycle 4 was over here, then it would have been a zigzag, subdividing 5, 3, 5. There would be very little alternation between cycle wave 4, which would be a shallow zigzag, and cycle wave 2, which was also a shallow zigzag. You would expect to see alternation between them, at least better alternation than that. I guess you could argue that there is some alternation. Cycle 4 is more shallow than cycle 2, but they're both the same structure, and you really would expect to see structural alternation. This wave count is presented as a what if. What if I'm just completely wrong? What if the main wave count is invalidated? What if we see new all-time highs? If that happens, then cycle 4 could have been over here. Cycle 5 could be underway. We need to see a 5-wave structure complete upward. If we're in a new trend at cycle degree, we could have a short little wave for intermediate 1, a very deep expanded flat for 2, an impulse for 3, and a zigzag unfolding for 4. Again, from this high to this low at the hourly chart level, I cannot see a complete 5-wave structure. And so, at least short term for this bullish alternate, more downward movement also would be expected to complete a 5-wave structure down for the C wave. There would be some alternation between intermediate 4 as a zigzag and intermediate 2 as a deep expanded flat, but not a lot of alternation in depth. Intermediate 4 may not move into intermediate wave 1 price territory below 1948.04. A new low below that point will fully and finally discard this very bullish idea. The target for cycle 5 is for it to reach equality in length with cycle 1 at 2557, and if it reaches equality in duration, it should last about a year. That would give the wave count a reasonably good look at the monthly chart level. But as I said, there is no support from regular technical analysis that I can see for this, particularly at the weekly and monthly chart level. This is my preferred wave count at the daily chart level. It has the most support at the weekly and monthly chart level. It sees a big trend change at supercycle degree up here in the beginning of a big market crash. I'm going to use Dow theory. I'm looking at the S&P, the industrials, transportations, NASDAQ and Russell 2000. Once they have all made new major swing lows, then this will be my only wave count. While Dow theory has not yet confirmed a big bear market for the indices, I'll present my more bullish wave count first to consider all possibilities. If we've had a trend change here, we can see a 5 complete down here. The 5th wave is slightly truncated. That's okay. A truncation happens after a prior movement which moves too far, too fast, and this very, very strong 3rd wave, a sheer drop, certainly fits that description. We have a zigzag possibly complete up here for a very deep 2nd wave correction. The 3rd wave will reach 2.618, the length of the 1st wave, at 1428. I would expect that's an appropriate ratio to apply for that target when the 2nd wave correction is very, very deep. The 3rd wave must subdivide as an impulse. We have an impulse down for a 1st wave, a pretty obvious 3-wave looking structure up for another deep 2nd wave correction, and within minor wave 3, another 1st and 2nd wave here at the daily chart level. Minor wave 3 will reach 2.618, the length of minor 1 at 1850. Again, I think that's the appropriate Fibonacci ratio to use to calculate that target, because again, the 2nd wave correction is so deep. This small cyan trend line has provided resistance for upward movement for Tuesday's session, and prior, this lower sloping cyan trend line provided support for downward movement. Again, if we see any more upward movement to start tomorrow's session, look out for it to find strong resistance at this trend line. Let's have a look now at the structure at the hourly chart level, where the end of minor 2 is this point up here. So within minor wave 3 we have a 1st and 2nd wave, another 1st and 2nd wave, another, and now another 1st and 2nd wave. So in total, including intermediate degree at the daily chart level, there are now 6 overlapping 1st and 2nd waves. If this wave count is correct, what that means is we should be starting to see a really strong increase in downward momentum. In the middle of this next 3rd wave should be stronger and faster than the middle of the last big 3rd wave down to the August lows. The short-term target for micro 3 is 1934, where it would reach 1.618, the length of micro wave 1. The next interruption to the downward trend might be when the middle of the 3rd wave at micro degree is complete, because this 2nd wave now shows up at the daily chart level, giving us 2 green candlesticks. And so for the middle of this 3rd wave to have the right look at the daily chart level, then the corresponding 4th wave to come may also show up at the daily chart level, and then we'd see the whole structure really clear. It would have a typical look. When markets open tomorrow, if price moves any higher, look out for it to find resistance at this cyan trend line I've copied over carefully from the daily chart. Micro 2 can't move beyond the start of 1 above 2067.65. If this wave count is invalidated by upward movement, then I'm going to have to reconsider the idea that intermediate 2 is not over and it could possibly be continuing higher. From this high to this low, I cannot see a complete 5-wave impulse structure. It can't be a diagonal 1, 2, 3, 4, 5. If this is the third wave, it would be the shortest out of 1, 3, and 5. It can't be an impulse. There's too much overlapping. This would be a fourth wave in a first wave price territory. The only way I guess you could try and force it as a complete 5-wave impulse down here would be to see a bunch of little fourth wave corrections in here corresponding to these bigger and deeper second wave corrections. That's possible, I guess, but it doesn't have the right look. The proportions between the second and fourth waves at the hourly chart level are too disproportionate. It gives this movement a look that's not a complete 5. What I think is most likely is what I have labelled here, a series of overlapping first and second waves. MACD does often come up to touch the zero line when second wave corrections are deep, and they can often be quite deep. Let's enlarge this a little bit. From stock charts, we have today's candlestick, some upward movement on somewhat of a decline in volume, and so there wasn't proper support for that upward movement from volume, and so the rise in price is suspicious. We may be finding some resistance about this 9-day exponential moving average, the golden line, and importantly prices remaining below, again, the 200-day simple moving average. We found some support at this lower horizontal trend line, which previously provided support and resistance. We may find some support again on the way down. There is a downward trend in place according to ADX. ADX is rising. The negative DX line is above the positive DX line. That tells us the market should be trending and the trend should be down. ATR is agreeing the range in which price is moving is increasing, and that's typical of the S&P's price behaviour during a trending market. And so with these two indicators, ADX and ATR agreeing, and we're seeing lower lows and lower highs from these swing highs, the trend should be expected to be down until proven otherwise, particularly as the volume profile continues to almost consistently be more bearish than bullish. As price rises, volume falls. As price falls, volume rises, and that's bearish. There's support for a fall in price. There isn't enough support for a rise in price. On balance, volume gave us a weak bullish signal when it breached this longer held sloping cyan trend line. If we see any further upward movement from on balance volume, it may find pretty strong resistance at this pink trend line. It's almost horizontal. It's been repeatedly tested for support and then breached and found resistance there. And so on balance volume is often a leading indicator when used with trend lines. It may tell us if and when further upward movement comes to end. RSI is returning close to neutral. If there is still a downward trend, then there's plenty of room for this market to fall. And that's all from me today with your S&P analysis. I hope that all of our members are having a fabulous day.